Welcome to our weekly market review, and as if 2023 wasn't topsy-turvy enough, we start this week with the eruption of yet another war. Israel has declared war on Hamas following several unexpected attacks by the group at the weekend. Markets reacted with the prices of oil, gold, wheat and other commodities surging. We are expecting this knee-jerk reaction to wane as the week progresses, but this is dependent on how developments unfold in the region. The US non-farm payrolls were the data highlight last week, and the American labor market continues to defy expectations, proving resilient. US Treasuries started selling off on the back of the data, supporting the dollar, putting the stock market under pressure and weighing on emerging market assets. However, the move was not sustained. We should remember that the US labor data is only one piece of the puzzle, and it's often a lagging indicator. There are several other releases highlighting the upcoming slowdown. And in fact, the US Fed Fund futures have priced in a lower expectation of a rate hike, which sounds counterintuitive, but is understandable given the greater context of the American economy and the monetary tightening still unfolding. The dollar will likely be prompted this week by the happenings between Israel and Hamas. Then on Wednesday, the Fed will release its minutes from its September policy update. It will be the main event of the week. We will also be looking out for the US's inflation figures for September coming out on Thursday. It's important for the positioning heading into the Fed's policy update in November. Headline inflation is expected to have eased somewhat heading into the end of Q3. And as for the rand's movement against the US dollar, the candlestick patterns hint at a reversal. And if the Fed's minutes prove less hawkish than markets anticipate, we could see a US dollar retreat, and the rand could even test levels of 19.26 against the greenback. Domestic releases out this week include manufacturing and mining. Now, mining production is expected to continue with its declining trend. Slower global demand, particularly from China, is among the contributing factors. Now, a decline in mineral sales is a direct risk to a decline in corporate tax collections, which in turn contributes to South Africa's deteriorating fiscal position. Now, while we're on South Africa's finances, I caught up with Western Cape Premier Alan Winde on whether a province can state-proof itself against the fiscal crisis playing out at a national level. Snippets of the interview is available on our YouTube channel, or you can get the full discussion on Spotify. Look for our podcast. It's called Reset the Frame. That then the week that was and the one to come for the markets.